Everyone's talking about Bitcoin treasury companies right now. Do you have a take on that? How are you assessing this trend of Bitcoin treasury companies, especially the leveraged ones?
I love to see the Bitcoin treasury companies. I love to see them growing. It's a speculative attack on the dollar. And we've discussed the issues with the dollar and how the dollar is a system of control and a tool of hegemony and has a lot of problems. So I just love to see Bitcoin being adopted at an institutional level.
Hi everyone, and welcome to Stefan Livera podcast, brought to you by Bold. Joining me today is the CEO and co-founder of Bold, Zack Pardey. Zack, welcome to the show.
Thanks for having me, Stefan. Great to be here.
Yeah, great to finally chat with you on the podcast. Obviously, we've been talking a little bit in the background for a little while. Now, I will just disclose up front, I am also an advisor of Bold, and of course, Bold is the lead sponsor of my show. But really wanted to have a chat with you and give listeners a chance to hear your perspectives on things, how you got started in this, why you started Bold, and of course, kind of where we're going today in this kind of fiat crazy clown world. So let's just start with a bit on you. Give us a bit of a background on yourself and what really got you excited about Bitcoin.
Yeah, absolutely. So I grew up in the Boston area. My interests were always kind of at the intersection of science, engineering, and business. And so, that led me to, through a path through engineering and then a path to working as the head of research and development at a startup in San Francisco, starting back in 2018. And my experience there really is what kind of turned me on to the need for Bitcoin and the role that it fills in the world today and with the most important issues that we face as a society.
Right. And so San Francisco, I'm sure, has gone through sort of, in recent years, a lot of kind of ups and downs. I know that has, been a big point for a lot of Bitcoiners, right? There was the big 2019 San Francisco event that kind of pulled a lot of people together. And then I guess there was a lot of, around the time of all the lockdowns and all this stuff, there was a lot around that as well. What was that experience like for you?
Yeah, that had a big influence on me and kind of the path that turned me toward Bitcoin. So I can say a little bit about how that went. So I moved to San Francisco, like I was mentioning, in 2018. I was doing great work at a startup. We were building affordable housing. I was leading research and development in construction systems, but I just observed around me so much decay in society, right? So you have tons of homeless people that have really zombified themselves in their addictions, tons of crime. Crime was rampant. Car break-ins, you can't leave anything in your car. My friends' houses were getting broken into. On top of that, the cost of housing was through the roof and unmanageable for most people. And then you layered on top of that, the whole saga of COVID, right, which was particularly acute in San Francisco in that city's response to it. And so, that was kind of what turned me on to and illuminated this concept that others have talked about called anarcho-tyranny, right? So I realized we were living in that city and in many cities across the world in the West under a system where certain groups are allowed to break the law with impunity. Disorder is tolerated and even cultivated. But then for productive members of society, people trying to go to work every day, laws are enforced rigorously in an overbearing way. In my previous role, it was nearly impossible to actually build new housing, for example. And then with the COVID stuff, there was an increasing level of control over personal lives of everyone living there, right? So I'm trying to go to a restaurant, they're checking papers. And then it became clear how this system actually works, where a government introduces a problem, um, and the systems that they roll out to address the problem actually exacerbate the problem. They get more funding, and then the cycle continues. And so I was witnessing that all around me and realizing that this is largely a fiat phenomenon. So when money is easy and flows to these government entities that fund their nonprofits, that cause these issues, while they purport to solve the issues, it became very clear that this was a symptom of the fiat system.
Yeah, and I think there's so many points that we can go into there. Like, I mean, obviously, I think a lot of Bitcoiners will agree with you on this, that there are all these fiat cultural and social issues of our time that have exacerbated many of these things. Now, people can argue about whether it was it like sort of planned, this kind of pandemic kind of thing, or I think it's more like it was almost like a bottom up social contagion, but what drove a lot of that is maybe the conditions that we were in, like the world kind of broadly, because of things like the welfare state, because of, let's say, weakened mindsets about things. This kind of idea that, as in what we saw was people at the bottom sort of yelling to the politicians, hey, lock me down harder, right? Because they had been put into this sort of state of fear. And, we, in many ways, had become weaker as a society, and we weren't able to push back strongly. And those of us, let's say, from the Western world, the kind of Western Anglo-speaking world, the part of the world that, let's say, many of us thought we are more free than other parts of the world. Actually, some of these countries turned out to be, some of these countries and places turned out to be some of the worst from a COVID tyranny perspective, right? Places like Australia, New Zealand, Canada, they were some of the worst. Of course, many parts of America also. So I think I'm curious how you see that, like this kind of degeneration in our culture and kind of welfare statism, and this kind of idea that, oh, well, some parts of the society are, you're essential and you're non-essential, and we can just give you checks, and the essential people can just kind of keep the society, keep working, and everyone else, you just have to stay at home.
Yeah, exactly. So I think it functions essentially on two levels. The fiat system, it functions at the macro level and on the micro level as a system of control. So at the macro level, for example, you look at, just focusing on San Francisco again, you look at the budget of that city. It grew 2.5x from 2010 until now. A large function of what they purportedly are trying to do is clean up the streets. Yet the homeless population there has increased by 30%. So if you just look at the numbers, it becomes clear that there's a narrative and then there's the reality, and they don't match up. And then at the micro level, Andreas and Antonopoulos in a talk a long time ago laid this out, that money is a system of control, as well as its three typically talked about functions. But in this context, money as a system of control became very kind of apparent with the lockdowns and what was happening with inflation, right? So, Bitcoiners know well the statistic from approximately 2020 until 2022, 40% of all dollars were created. If you held dollars in your bank account, 25% of their purchasing power has been eroded in the past 5 years. If you live in a major city such as Miami, where I live now, rent has gone up in that same period about 2.2x, right? So it's more than doubled. And so having a money printer enables this, right? Both at the macro level with wasteful and counterproductive government systems, and at the micro level as a system of control, where, through that period, the past 5 years, 2020 to 2023, heavily, we saw a number of things happening, right? So some of them in the US, but a lot globally, right? So, you know, there was the rollout of essentially the Chinese digital yuan and the beginning of their social credit system, right? So if you're crossing the road in China and you're jaywalking, money's being deducted from your bank account. Back then, we had also the Canadian truckers protests in Canada. Their bank accounts got frozen. And then, of course, there was the choke point 1.0 and 2.0 sagas, right? So, to summarize those, it was the systematic debanking of entire industries that are not in political favor of the government at the time. So, in the choke point 2.0 example, the Bitcoin industry was strongly targeted, and it was nearly impossible to get banking access as a Bitcoin company. You can look back to another example. So back under the Biden administration in the United States, Biden nominated as the head of the OCC, which is one of the bank regulators, a woman named Sol Omarova, who published a paper called "The People's Ledger: How to Democratize Money and Finance." The main thrust of that idea that came somewhat close to becoming reality was that you would have a bank account at the Fed. The Fed would be able to put stimmy checks into your account, or if they wanted to contract monetary policy, they would be able to withdraw money from your account at will. Not a lot of people know about this. As always, it was hidden in the fine print. You have to actually do the research and read it. But that's what they were going for, right? Was a CBDC style system where if they can't pass a law to control people in the way that they want, to enforce, for example, vaccine passports was a very real thing that, you can read New York Times headlines, like use this app to gain access to public spaces. And then you just look at what I was mentioning is going on in China, and they've put it all together. Summarizing at the macro level, you've got fiat funding government programs that are working against personal liberty. You've got inflation, which erodes purchasing power of people, which makes them more dependent on these systems. And then you've got the explicit financial control via access to the banking system that was used to enact, was in different countries, these extrajudicial programs.
Yeah, so I think there's all these different elements going on, and meanwhile, I think it's fair to say 2020 was that few years was a big time for Bitcoin adoption, right? There were a lot of people who came in. Michael Saylor and MicroStrategy at that time, Tesla, a whole bunch of people. I think they kind of had that wake up moment that, hold on, the money that I think is in my bank account, it's not all there, or it's not really under my sole control. And up until that point, I think if you talked to the average person on the street, they would have sort of, they would have just accepted that, okay, yeah, my money's in the bank account and whatever, it mostly works. Yeah, maybe it's a little annoying here and there, I grumble here and there, but mostly it works. And then sort of 2020, 2021, there was a whole new class of people who sort of woke up to it. But I'm curious what you think. Why is it that more people haven't really woken up to to Bitcoin, as being the answer here?
Because those systems that I was just mentioning and how the fiat system works against the everyday person, it's a convoluted story, right? It's not a direct, at least currently, it's not a direct path to say, the government is getting all this money and it's benefiting from my impoverishment, and it's actually using inflation to fund its programs while taking money out of my pocket, because it's designed that way. And so, I think people are waking up to the nature of Bitcoin as an antithesis to that system, because what Bitcoin does is it, it preserves your purchasing power, so it fights against the macro level repression of financial repression of the fiat system. And on a micro level, it's open, anyone can participate, and it's unconfiscatable. And therefore, it's an antithesis to that vision of the Chinese-style credit system and its embodiment in a U.S. CBDC.
Yeah,
I think
so
a lot of
it just
people
comes
are
down
really
to, I guess, I mean, there's still a lot of people who don't really grasp those things, or maybe for them, they're just kind of going through life in a kind of complacent way. So I guess in your view, then, what is it going to take for, more people to really come to this? Is it just a matter of time? Is it a matter of having it explained to them the right way? Is it, until their influencer tells them to, or what?
Yeah, I think that it needs to start really simple for folks. For your everyday person who's working a job, saves in dollars, might put a little bit of money into the stock market, feels like they're getting farther and farther behind, doesn't exactly know what's going on. We, as a Bitcoin industry, I think it's incumbent on us to provide tools and solutions that make it really simple and easy, and almost sort of the default action to start accumulating Bitcoin. And then once people own just a little bit of Bitcoin and they see the price appreciation in fiat terms, then they start to ask the question of, what is this thing? It seems to not be dead. It's been here for, decade plus now. And it's growing consistently. What, shouldn't the government have shut it down? Oh, wow, it's actually being embraced at the government level now. It's taking up an increasing, place on corporate treasuries. States are putting it on their balance sheet. And so it starts with a small exposure to the concept. You need to have multiple touch points with Bitcoin before you start to ask the question of, what is it? Should I even be taking this seriously? Because, it's easy to forget that, if you're not a Bitcoiner yet, the whole thing can just seem a little bit weird or kind of on the fringe, or, by definition, it's not mainstream, right? So, like I was saying, I think the way to bring people around to Bitcoin is to build the tools to make it really easy to acquire Bitcoin, gain some exposure with a platform and through the fiat means that you're used to, right? And that kind of leads us into Bold.
The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold vault. The Bold Vault is a 2 of 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Cold Card hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. And now, back to the show. Yeah, of course. And so I think, as you say, it's like this idea of, of course, we can be idealists and think about, only using Bitcoin, but the reality of the world today is people still have to interface with the fiat system, and they likely will need to for some time because, hyper-Bitcoinization is not going to happen overnight. So what does interfacing with the fiat world look like? And maybe you could tie that in with a little bit of, what does that look like in a Bold context?
Like I was saying, to make Bitcoin go mainstream, and it's on a glide path to getting there, but it's on that path because of the hard work of Bitcoiners to bring Bitcoin to all the different aspects of the traditional fiat system, right? So Bitcoin treasuries are big in the news these days. it's our belief that integrating, at Bold, it's our belief that integrating Bitcoin with the traditional banking system is a key next step in the institutionalization of Bitcoin, or rather, I should say, the Bitcoinization of fiat institutions. So that as an everyday person, you can say, oh, Bitcoin is in my bank account. I could just buy a little bit, or let me just spend on my card. I'm spending on this card anyway. I can get rewards in Bitcoin, and I'll earn a little bit that way and gain some exposure to it. And then you're off zero. And once you're off zero, then you start learning, right? So,
Yeah.
because people learn by doing.
I'd love to tap into more the concept there around Bitcoinizing the financial system, right? Because a lot of people, they might think of it the other way around. Oh, Bitcoin is being financialized. Well, what about, in your view, what are some of the ways that we're going to Bitcoinize the world?
Yeah. So the thing about Bitcoin is its decentralized nature. That's what makes it unique as an asset class, and more importantly, as a technology. It's truly decentralized. And so what's become evident is that Bitcoin is going to do what Bitcoin does every 10 minutes, a new block. And it's easier for an institution, so even one as strong and as big and old as BlackRock, for example, to start working with Bitcoin and to embrace Bitcoin than it is to make any change to Bitcoin, because of Bitcoin's decentralized nature. So we're seeing it happen. And when we bring Bitcoin into people's everyday FDIC insured bank accounts, which is the next step in the Bitcoinization of the financial world, that will be another step in this process of Bitcoin being an everyday thing where, it's not just, the idea of being a Bitcoiner will, in the next 10 to 15 years, maybe become an outdated concept, right? Because, maybe when 20, 30, 40% of people start holding a significant fraction of their savings in Bitcoin, that's when Bitcoin really becomes politically, it can't be removed, right? It's like, once it's, once it's in that many people's pockets and it's composing a major fraction of their savings, you can't mess with that, right? So so to summarize what I'm saying, the way to get Bitcoin in the hands of many people is to bring Bitcoin into the fiat banking system, because people already have fiat banking, because of the network effects of the fiat system and the card system that we use for payments. Those things are hard to supplant with, we've had, many attempts at Bitcoin for merchant adoption. The reason that they don't quite get the traction that, we know that they will eventually get is because we don't yet have the critical mass of people that are holding Bitcoin, and who understand what Bitcoin is and therefore believe in Bitcoin. So
Yeah,
bringing
I'm
Bitcoin,
with you there. I think
yeah,
it's about this fundamental adoption, and we need enough people to have it, even in their cash balance or in their savings, before we'll start to see a real mainstream of spending. Now, of course, there'll be certain circular economies, things like Bitcoin Jungle or Bitcoin Beach and so on. But in terms of making it happen at larger scales, I think this is what it will take.
yeah, and
So let's go on.
the circular economies are great. I mean, those are, but I see them as R&D, right? And maybe, we hope that an increasing number of them will continue to grow. But still, you talk to, your friend who's a real estate agent, they're not like, I'm moving to a Bitcoin circular economy. They're like, look, man, I got a house, a mortgage, 2 kids. Like this, you guys are doing your own thing.
Right.
But
It
I do
doesn't
have a
feel
bank,
real to them. Yeah.
but I do have a bank account, and I do have a debit card, and I am already spending on it. So, is there a card? Is there a bank account that could actually allow me to grow my purchasing power over time and do well for my family and reserve the life's energy that I put into earning my money versus having it erode, that's what's going to tilt the scales toward Bitcoin truly mass adoption. And think of it in terms of the adoption curve crossing the chasm.
Yeah. Okay, so let's bring it back to Bold and how this ties in. And yeah, give us just the overview. What's the plan with Bold? What are the main services that you're offering?
Yes. So, I talked about my adventure in San Francisco and all the ills of the fiat system. Thinking about that and then contrasting that with the world of Bitcoin and how Bitcoin is the antithesis to that system, led me to this question of what is going to be the future of everyday banking. It's going to, and it became very clear that it's going to go one of two ways. It's going to go the way of the personal control in the Chinese style social credit system, where banking, is only if you're good, right? You get your USD tokens, or it can go the other way, where banking is Bitcoinized and it becomes a tool of freedom. And in order for that to be the case, it's important, in our eyes, in my eyes, that as the fiat banking system becomes Bitcoinized, we do so in a way that is in the ethos of Bitcoin. What does that mean? It means, it's not packed full of altcoins and shitcoins and things like that. It's Bitcoin only, one. And then two, it's centered around self-custody. So what we've built at Bold is a banking platform where you have, it's a fully featured banking platform. So you get a US dollar checking account with a linked debit card where you can earn the leading rewards in Bitcoin back. Furthermore, it's linked in with a self-custody multi-signature vault. So we're encouraging our customers to take multi-sig self-custody of their Bitcoin in a safe and redundant way that's, safe against loss of keys or compromise. So we're embodying the values of what I was just laying out, right? We're making it easy for people to do what they do every day, which is interact in the fiat world, spend on their cards, earn the industry's best Bitcoin back, store that Bitcoin in self-custody, and also we've got a setup where the more Bitcoin you buy with Bold, the more Bitcoin you earn on your card, the more Bitcoin back rewards you earn. So, the rewards start at 0.25%, and they go up to as much as 10% Bitcoin back on your debit card spending, the more Bitcoin you buy. And we're the only program of that kind. And the reason we have it set up that way is because we, of course, want to incentivize people to hold an increasing fraction of their savings in Bitcoin in cold storage for the long term, but we give them an easy on-ramp to start stacking with the card.
Excellent. And so, as I understand, then the basic, the main premise is that you set up, users can set up to have their salary and so on, come hit the checking account in Bold or through the platform. And then, of course, they can buy Bitcoin, but they can have maybe some fiat balance that they're using to tap their card when they're going to buy things. And this fiat balance on their card is also giving them sats back. So as they spend, they're getting that experience of, oh, hey, I just got some sats back instead of, frequent flyer miles or some other kind of, altcoin, let's say.
Exactly. So like all these fiat cards that are out there, the trick they try to pull is make you think that the rewards you're earning on the card is really valuable. Half the time it just sits there and expires, and it actually doesn't have that much value. In contrast, what we're doing at Bold is we're giving you the world's hardest, most finite and scarce form of money as a reward on your card. And we're giving you a higher rate of reward than any competing Bitcoin-backed card on the market. Furthermore, like I was saying, the more Bitcoin you buy with Bold, the higher the level of sats back you earn on your card spending. And to make that an even more enticing offer, we have it so that we offer the lowest fees on Bitcoin buys and sells of any Bitcoin-only company on the market. That's something that we're proud of because, again, we're incentivizing people to store their life's energy in Bitcoin, take self-custody of it in cold storage, serving that Bitcoin ethos. And that's another, as another point toward what we've built, our vault does not have monthly fees. So some vaults out there, it's great to see a growing number of them, but they charge tens of dollars a month, hundreds of dollars per year. And that, of course, erodes your savings. It's kind of contrary to the point of what you're doing. We make money on, when customers buy and sell Bitcoin. And so we offer the vault free of charge on a monthly basis to use.
This episode is brought to you by CoinKite, the makers of my favorite Bitcoin hardware wallet, the Cold Card Q. Now, some people think self-custody is too hard, but it's really about taking responsibility for your Bitcoin wealth and understanding that self-custody gives you a true feeling of liberty. The Cold Card Q has a full keyboard and big screen. It's got 2 secure elements and a true air gap, allowing you to go fully air-gapped using QR codes from seed generation to transaction signing. You can power the device using 3 AAA batteries, so you don't even have to plug it into the wall for power. You can easily use it with Sparrow Wallet for PC or Nunchuck on mobile, and you can dial it into the right level of security and complexity that you choose. If you want a simple setup, just use 12 words and single signature. If you want passphrases, easy. If you want to add multi-sig or co-signing features, you've got those too. So go to coinkite.com, use code Livera to get 10% off on your cold card or other devices and level up your self-custody today. This episode is brought to you by Galoy, builders of banking software for the Bitcoin age. After years of risk and uncertainty, Bitcoin and banking are colliding. The regulatory environment is rapidly shifting in favor of Bitcoin and digital assets. Fintechs and crypto-native companies can become chartered banks, and traditional banks and credit unions will launch Bitcoin products. But the legacy core banking software that many financial institutions run on wasn't built for Bitcoin. The Galoy banking infrastructure stack delivers all the key elements of a modern core banking platform with cloud-native infrastructure, event-based architecture, and robust APIs coming together to meet the security, scalability, and reliability needs of banks of the future. Whether you are launching a modern financial institution from the ground up, or you are adding Bitcoin-backed lending or payments to your product offering, talk to the team at Galoy. Visit galoy.io or reach out to the team at biz@galoy.io. Excellent. So let's talk about the card, because I know that this is, becoming a hot topic. There's a lot of, competitors in this space. So just for listeners who might not be clear, I know there are competitors out there. So in the US market, as I understand, I think Coinbase have one, and I believe Gemini recently came out with one. So could you just contrast the Bold debit card versus competitors in the US Bitcoin-backed market?
Yep. Yeah. So the card is for US customers, to be clear. And the main differentiator of the Bold card versus the other cards is, one, it's a debit card. So you don't need to have your credit pulled. We don't need to poke around your business in order for you to use the card. And you don't need any particular credit score or any credit score at all to use the Bold card. So again, that's toward our goal of bringing Bitcoin into everyone and putting it in everyone's pocket. So Coinbase has launched a card. If you must use Coinbase, they're not a Bitcoin only company. They, a lot of their revenues go toward pumping altcoins that are questionable at best, and distractions from Bitcoin at worst. And so, essentially it's gambling. So, in contrast, we at Bold, we're a Bitcoin company. We don't want to mislead our customers into buying anything that's going to eventually go to zero, which everything other than Bitcoin will. And in terms of the card itself, so if you look at that Coinbase card, they incentivize a higher level of rewards if you hold a balance on Coinbase. And that, we believe is kind of contrary to the ethos of Bitcoin, because you're not taking self-custody, you're holding your Bitcoin on Coinbase. And then there's always that question of, Coinbase is holding so much Bitcoin. Is it a government confiscation honeypot? Do they actually have all the Bitcoin? Probably they do, but, are they doing proof of reserves? Even if they were, is there a proof of liabilities? Can there be? There's a lot of questions surrounding it. So with Bold, you just get a clean setup. It's Bitcoin only, and the rewards are higher than the rewards that you'll get on any other card in the crypto space when you buy Bitcoin with Bold.
Excellent. And then I guess coming to the self-custody point, maybe just spell out what the vault setup is there so people understand how that works.
Yes.
And, I presume, just for the new users and listeners, Bold has like a custodial setup, obviously, but then once the user is ready, then they can actually do self-custody. So can you just explain a bit about that setup?
Yeah. So the Bold Vault is a 2 of 3 multi-signature vault that uses Bitcoin's native multisig. All right. So if you're not familiar with multisig, how it works is 3 public keys are combined to form a multi-signature wallet. There's many possible permutations on the network, but with the Bold Vault, it's a 2 of 3 multisig. So it takes 2 keys of 3 to move the Bitcoin. You hold those 2 keys. Those 2 keys originate on 2 different hardware wallets that you own and that you plug in and register the public key from those hardware wallets with Bold. And then Bold uses those 2 public keys, one from each of your hardware wallets, to instantiate the vault. We hold 1 key as a backup. So if you were to lose one of your keys, we have you covered. A lot of our customers find it beneficial where if they're traveling, they don't want to hold their 2 keys, because then there's the risk of loss. So they just travel with 1 key and they request us, Bold, to countersign with them to withdraw from their vault. We charge a nominal $10 fee to do that.
Excellent. And so, yeah, I think it's a cool setup, because then new users can just kind of get started quickly and easily. And then there's a nice, ramping up there for the user that they can actually step it up into self-custody at that point. And so I think it's a good setup. And I like also, as you said, it's the lowest fees kind of per tier, let's say, per tier of buying. So I guess if you could just explain a little bit on the buying side, on the brokerage side, just explain a little bit about the structure there, about, what the fees are at what level of purchase, just like roughly, so people get a rough idea there.
Yeah. So the fees start, like I was saying, the lowest fees across Bitcoin-only companies, the fees decrease as your Bitcoin buys get bigger. So start at 0.98% for, a small buy, $100 or something. They go all the way down to 0.39% if you're making a big buy in the realm of $5 million worth, and everything in between.
Gotcha. So it's sort of a scale based on basically the more you buy, the less as a percentage your fees are. And I guess those amounts, is that based on like an annual amount or an overall purchase amount, or how does that part work?
Yeah, it's on a per purchase basis.
Gotcha. So I guess then the bigger like that individual stack is that you do, then the lower that fee is for that particular buy.
Exactly.
Okay. And then in terms of the fiat aspect of it, are you seeing that, like, because obviously the ideal case, for you, it would be if the customer is setting up kind of their salary to come to this account, and then they're, just buying, and then the idea is you're bringing most of your banking, or most, or your primary banking is with Bold. So can you just explain a little bit around that setup?
Yeah, exactly. It can be. So we've got sort of like a crawl, walk, run ladder of product um, levels with Bold, right? So you can just sign up with Bold, take 5 minutes to sign up, start spending on the debit card, and start earning rewards at 0.25% without doing anything other than signing up and using the card. Then you can deposit some fiat, draw from your FDIC insured fiat balance to spend on that card, or to buy Bitcoin. So you can buy, like we were just talking about, you can buy Bitcoin with Bold either from your Bold bank account balance or from an outside bank account balance for those low fees. And then the next step is, if you like, you can set up direct deposit so that your paycheck or a fraction of your paycheck goes into Bold, and you can auto stack all of or some of your paycheck as Bitcoin. And then we give you a secure place in the vault that we were just talking about to secure your Bitcoin for the long term. We also offer a managed Bitcoin wallet for smaller amounts that's insured by Lloyd's of London. It's running on infrastructure that has been battle tested over 11 years. This is the Bold managed wallet. So it's it's as safe as a managed wallet can get. It's been proven, no security incidents for 11 years, insured for up to 200 million by Lloyd's of London. And that's important, those factors, because as we've seen, that's where some dubious exchanges have basically disappeared, and people lose money.
Yeah, of course. And, we have to just keep shouting this from the rooftops, right? Not your keys, not your coins. But at the same time, we can't, and I agree. Like, I don't want to be a hypocrite and say, well, hey, many of us, or when we were new, maybe we started on custodial exchanges, but you, the newbie, you should never start on that. Well, the reality is a lot of people will start on some of these things. And as long as there's an upgrade pathway, let's say,
Exactly.
I think that's the way to go for a lot of these people. But that's perhaps one concern that people are having this cycle. This time around in 2025, people are saying, well, is all the new adoption happening through Bitcoin ETFs and Treasury companies? And what does that mean for self-custody adoption and the decentralization of Bitcoin? So do you have any take on this aspect of what's happening with self-custody?
Yeah, so self-custody, I went through this journey myself as my Bitcoin holdings, accumulated and grew in value, right? So you do, I, like a lot of us, and maybe most of us, some by, our user behavior, and others, something like 80% of people start off holding their Bitcoin kind of on the exchange in, if it's with Bold, that would be with our Bold wallet, the managed wallet, because it's, when you make a Bitcoin buy, that's where it lands. We make it easy so that, you can also buy direct to your vault, but not everybody has hardware wallets when they first start buying Bitcoin, because that requires a higher level of involvement and work to set up. And it's also not necessarily perceived to be worth it if you're only holding, $1,000 of Bitcoin or whatever. You're like, I'll get to it later. Like, this managed wallet is good enough for now. As your Bitcoin savings grow, as you stack more, and as the value increases, you start to just ask these questions of, well, Bitcoin is a really powerful tool. Shouldn't I be using it in the way that I'm taking advantage of the very property that makes it valuable and is driving the price up, which is the ability to take self-custody? And that's a journey of just kind of understanding that Bitcoin as a bearer asset, you're not getting the full benefit of Bitcoin until you take self-custody of it. And there's, like you were just saying, there's a lot of adoption happening on exchanges, or indirectly on exchanges via the ETFs. I think that's actually fine. It's good because, within the, sort of life cycle of a Bitcoin holder, there's awareness of Bitcoin, there's buying some Bitcoin, it's probably going to be on an exchange. And then as you get more educated, as the value increases, taking self-custody becomes the natural next step. And so, that's why we offer it on our platform, because we want to enable folks to base their entire financial life with Bold. But at the institutional level, it's one step at a time.
Yeah, yeah, and I mean, I think that's part. I think it's it all makes sense to me, at least in terms of what a typical person may go through as part of their journey. And yeah, not that I'm negative on Bitcoin ETFs or Treasury companies. The opposite. I think it's a rising tide. It's going to lift all boats here. But we just have to, if we are, let's say, ideological Bitcoiners, we have to just remember to sort of keep coaching people and reminding them, hey, not your keys, not your coins. Learn this process about self-custody and so on. The other big one I think people are having, and this is kind of like a perennial debate in Bitcoin on, should you spend your Bitcoin or should you just spend your fiat and this kind of thing. Of course, lots of arguments back and forth on this, but do you have any takes on this? Should you spend your Bitcoin?
Yeah. So there's the perennial discussion of, should I get on zero? Should I get on zero fiat? And I actually believe for most people, and I'll discuss the exceptions, for most people, the answer is no. You probably should hold some fiat. Why? Because if you hold all Bitcoin, you're going to end up selling some of that Bitcoin when you don't want to and when you will regret. Why will you sell it? Because psychologically, you think you're prepared to have your entire net worth go through a 70% drawdown, but you're not. You're really not. And so, because it becomes really nerve-wracking when you're like, oh, wow, like I was kind of, within striking distance of retirement when, it was at the top of the bull market, but, wow, like, is this money really gone? Bitcoin's very volatile. That is the, it's a double-edged sword. That's the other side of the sword to 60, 50, whatever percent compound annual growth rate. That's, makes it the top performing financial asset over, pick your time scale. So in order to not sell your Bitcoin at a bad time and then wind up with less Bitcoin than you started with, because, let's say Bitcoin dips, you get concerned, you sell, and then it rips right back up, and then you have to buy back in at a higher price. This happened to me. This happens to many people who haven't heard this message that I'm delivering right now, which is, I recommend, hold some fiat, because, if you have enough personal runway for you and your family in fiat, that gives you the psychological resilience to hold on to your stack of sats for the long term through heavy volatility, right? So, you hold from 15K up to 60, down back to 16, up to 112, down to 103, up to 250 eventually. And by that point, right, once you've been through one of these halving cycles, we can debate whether the halving cycle is, what drives the volatility, or if it's, liquidity cycle. It's probably both.
Yeah.
Once you've experienced, a 10x of your Bitcoin's fiat purchasing value, that's when I kind of start to think, all right, maybe it makes a little bit more sense to just hold Bitcoin, because you're aware of the volatility, you've held through the volatility. Bitcoin's now worth more on the other side of that. So, a swing of 5, 10, 20% doesn't doesn't make you lose sleep at night when you've already been through a protracted 2-year, 3-year long 70% downturn and then come up the other side. So experienced Bitcoiners, you want to get to the point where you've been through a cycle, a drawdown like that, held onto a significant amount of Bitcoin. Once you've done that, then you can start, in my opinion, it starts to become wise to hold zero or close to zero fiat.
Yeah, I think it's a fair point you make around psychology and our emotions, especially for a new person, right? It's one thing for, an OG who's been in the game for a long time, and for that person to be taking more, let's say, advanced or more, out there strategies, because maybe that works for them. But for an everyday new person, it's just perhaps beyond the pale for them, and it's something that they could, assess for themselves later down the track after they've had a full 4 or 5 years in the game, let's say.
What a lot of Bitcoiners do is they say, "Oh my God, this thing is amazing. This is a once in a lifetime opportunity. I need to stack to the gills. I'm maxing out my credit cards to stack. I mortgaged my house to stack. I have zero fiat left." Well, okay, maybe the mortgage I think can be a wise thing to do, because it's, as long as you can stay solvent and manage the interest payments. But, the credit cards, things with significantly high interest payments or that have, are going to cause high monthly payments on, if we're talking about leverage here, that, let's say it's now a 70% drawdown, you have much less Bitcoin to sell to pay that loan back. You're servicing the loan at a rate that now you're maybe needing to sell a little bit of Bitcoin just to service it. You really want to avoid that. So that's why I recommend keeping a close eye and running a scenario for yourself of, what do I do in the case of a significant drawdown over the course of years?
Yeah. Yeah, I think it's prudent. You need to think about that. Obviously, there have been 80% drawdowns in Bitcoin's past. Who knows what the future holds? None of us knows. Yes, volatility is coming down a little bit over time, but none of us knows when or how big the next bear market is going to be. So it's prudent for people to think about that. Now,
exactly. And the last thing I would add to that is, when you have a little bit of fiat set aside, in the event that Bitcoin does go through that big drawdown, you have some dry powder to buy the bottom.
Yeah, and that's also another great point, that being able to buy those bottoms, it helps you be the hodler of last resort also, right? The buyer of last resort. You are arguably helping by kind of helping stabilize the bottom of the price, so that it can sort of have a more steady upwards growth over time. But of course, that volatility still exists, so we have to be aware and be ready for that. Last topic that we probably have some time to cover. Obviously, super hot topic. It's the big, everyone's talking about Bitcoin Treasury companies right now. Do you have a take on that? How are you assessing this trend of Bitcoin Treasury companies, especially the leveraged ones?
I love to see the Bitcoin Treasury companies. I love to see them growing. It's a speculative attack on the dollar. And we've discussed the issues with the dollar and how the dollar is a system of control and a tool of, hegemony, and has a lot of problems. So I just love to see Bitcoin being adopted at an institutional level, and adopted at an institutional level through a lot of companies that are sort of pure play Bitcoin treasury companies. And one of the reasons that's interesting is because it is that speculative attack on the dollar, where these companies are, and it is a speculative attack on the dollar because of the financial mechanisms that the companies are using to build their Bitcoin treasuries. So, just by kind of way of education, there are 3 ways that a company can finance itself and can buy Bitcoin. One way, the obvious way, is they sell stock, right? So buyers of the stock give the company dollars. The company can sell debt, right? So, for a big company, that's bonds. Or, of course, they can use their earnings. So all corporate activity and any way that a company gets money is one of these 3 ways. And so the Bitcoin treasury companies especially the pure play ones, they're interesting because they're issuing stock. They're using the proceeds from the sale of that stock to buy the Bitcoin. And then a lot of people who are holding the stock in these Bitcoin treasury companies are, they're looking at the MNAV ratio, right? So the multiple of the stock's market cap to the net value of the Bitcoin treasury of the company gives you a ratio. Oftentimes the ratio is over 1. That's possible because there's an expectation that the companies will, the given company will buy more Bitcoin per share than it currently has. And in so doing, as a holder of those shares, you get an increase you get a Bitcoin yield, right? You get a greater number of Bitcoin per share that you own. That's kind of the thing that people are chasing. So for a pure play Bitcoin treasury company, stockholder, they already own the stock. There's not a huge operating model, right? They're not selling a good or service, right? So they don't really have a ton in terms of earnings. So mainly they're financing the Bitcoin purchases via debt of some form. And there's many forms of debt, and sometimes they mix the debt with the equity, but essentially, fundamentally, they're selling debt. And debt often has a servicing cost. It often has an interest payment. And always debt introduces some form of risk, right? Because you have to repay that debt. And the early Bitcoin treasury companies, the MicroStrategy, Strategy, all the new ones that we're seeing popping up, Nakamoto, all of its derivatives, and just a growing raft of them. They're especially in Japan, right? They're able to sell and finance their Bitcoin purchases with debt on really great terms that are very favorable to the company, especially Metaplanet in Japan, because Japanese government bonds and corporate bonds are so low yielding, right? So the debt markets are really hungry at the moment for exposure to Bitcoin companies because it's something new, it's something different, and the type of institutions that buy most corporate debt very often have a ton of restrictions on them in terms of things they can buy. A lot of them, pensions, for example, they can kind of only buy bonds of companies or bonds of some form. They can't actually buy Bitcoin itself. So if those buyers of corporate debt can get exposure to Bitcoin indirectly, they're really interested in doing so because they believe it provides good value relative to the other kind of debt being sold on the market. That will change as the amount of Bitcoin treasury company debt on the market increases because there's a competitive market for debt. I think we're a ways off from that, like maybe a decade or 5 or 10 years off from the debt market getting anywhere near saturated in terms of the demand for Bitcoin company stock. But kind of final note on this point is I would expect this trend of Bitcoin treasury companies selling debt to buy Bitcoin approximately when the interest that they need to offer on that debt approximately comes to equal the compound annual growth rate of Bitcoin's price appreciation in fiat terms.
Right. And so it's kind of like as that tapers down over time, then eventually there might be a crossover point, or maybe there won't be. I mean, who knows, right? None of us knows, but it could be a while, it could be 20 years out, 30 years out. I mean, none of us really knows.
It really could be. It really could be. So this has a long way to run, but just as with the personal sort of recipe for financial success that I was spelling out, don't over lever yourself. Companies need to follow the same advice, right? So if and when that market for corporate debt to fund Bitcoin treasury companies becomes more competitive, and they need to offer terms that maybe are shorter term, have higher coupon payments. They add risk to the companies, and as a Bitcoin Treasury company, as a buyer of Bitcoin Treasury company stock, it's probably just worth doing a little bit of research into are the terms of the debt that's funding the Bitcoin purchases, are they going to be sufficient to allow the company to stay solvent through a significant drawdown?
Yeah, and I think that just comes down to professional management, competence. Ideally, the people managing those companies are Bitcoiners who've been through cycles themselves, so they know sort of what to expect and how to structure things such that the company is set up for success. And of course, I think it's important for people to understand that while people might make plays here and there on Bitcoin Treasury companies, I think it definitely comes back to kind of not your keys, not your coins. Self-custody Bitcoin is the most important thing in terms of what is the lowest risk, right? The way I'm seeing it, and I'm sure the way you and probably many listeners see it is, self-custody Bitcoin is the safest thing, but some of these Bitcoin Treasury companies, they may be able to outperform Bitcoin, but there are some additional risks with that. And it's up to people to sort of assess what they view those risks being compared to self-custody Bitcoin being the safest thing.
Exactly.
Yeah. So look, we're probably about out of time now. So any final comments and where can people find you and find Bold?
Yeah. So check out Bold at getbold.io. And you can find me on X at Zack Pardey, just my name. And you can find our Bold account at Bold Bitcoin.
Fantastic. Zach, thanks for joining me.
Thank you, Stefan.